of gold per contract times almost $2,000, about 1960, 1970 in terms of gold price, you get over $3 billion. So $3 billion of gold is changing hands on the COMEX in a day, and that's tremendous.
Welcome to Gold Silver Pros.
Well, ladies and gentlemen, it looks like gold is about to pop. This is your host, 𝘺𝘀𝙀 with goldsilverpros.com, reporting on June 1st, 2023, the first day of June, and what a difference a day makes. We're now, I guess, getting close to official summertime. And typically in the summer, it's sell and man, go away for a lot of the financial markets, but the physical demand in gold is not stopping. And I wanted to show you that we've had just tremendous deliveries really over the past 2 days, which is very encouraging for the physical side of the gold market. It means that during summer, this isn't going to really slow down. People are going to stay interested. But the physical demand that we're seeing is largely driven by large entities. It's a big amounts. And we'll go ahead and get into that and show you what I mean. We're going to start off by looking at the COT report. This is from the CFTC, which is the regulator for the market. And I'm looking at the latest COT report. It's in arrears, so we've got data out until the May 23rd. But it gives us a good idea of what happened in the previous week with the gold and silver market. And I wanted to start off right away by showing you that the swap dealers have dumped a tremendous short position, almost 17,000 contracts in a week. And as well, the producer merchants did the same. So you add those together and it's about 24,000 contracts that went net long, really, for the swap dealers and the producers. They're the ones that are closest to the actual physical part of the market. Think about producers and merchants. The producers are the miners that produce it, or any recycling company, I guess, could fit in there. And then the merchants are the ones that use it. So they're closest to actually using the commodity, closest to the actual commodity itself rather than the paper. And then the bullion banks are probably the smartest financial house there. They do facilitate some of that hedge trading, but also do a lot of the speculative. And they're very close to it as well because they see the data coming in from everybody else. Who took the opposite side of that trade? Well, as you see what happened, the managed money and the other reportables went net short. Why? Because they dropped long. So they took the other side. So the swap dealer, producer, merchants, the one closest to the physical side of the trade, are going long gold tremendously this week, a huge position, almost a 10% position split for the swap dealers, and much more than 10% for the producer merchants. It looked like 13 or 14% in a week. And then it was the financial types, the managed money, you know, the weak money that's not going to buy into the long-term bull because they're not gold silver people. And then the other reportables, can't imagine why they dropped 7,800 contracts. I think gold long-term is going to go higher. But obviously in the short term, they weren't as concerned. Why does that matter? Well, at the same time, the bullion banks and the producer merchants who are closest to the physical are going along. We had just not record, but for this contract and what I would have expected, we've had really high delivery. We're looking here at the delivery notice report, the NYMEX delivery notice report, again, put out by the CME group who runs these markets. This is the COMEX exchange. This is the gold 100 futures. And on 5/30, it was the first or second trading day of the month. Let's actually go up the third trading day of the month. Nope, second trading day of the month for gold, 9,024 contracts of 100 ounce gold. And then the next day, 65.37. So the first two big delivery days of the month for June, contracts were redeemed to the tune of over 15,561. If you multiply that by 100 ounces of gold per contract times almost $2,000, about 1960, 1970 in terms of gold price, you get over $3 billion. So $3 billion of gold is changing hands on the COMEX in a day, and that's tremendous. Why? Because if you look at the tail of the tape, it's on the June contract, the first couple of days of delivery. We actually lost more contracts than we had. We still had some contracts left, but over half of the contracts are gone, which means people are coming for like almost immediate delivery. 9,024 deliveries in a day. And then again, you see on the stops report, and this isn't available at CME Group until the end of the day because that report looks backwards. You'll see another 6,500, you know, when today's trading data is finalized. And people are rotating out of June and going into August, which is the next big delivery month, or the next big contract and delivery month. But that didn't stop them from going to June. And how did we know that probably was going to happen? Well, it's this number right here, this exchange for physical that you guys see on the screen. When you do exchange for physical, you're saying, I don't have enough physical available in the COMEX in the current month. Maybe it's not a big trade month. There are not a lot of contracts. Certainly look at July. There's only 2,906 contracts. You're not going to get a lot of delivery when there's not a lot of open interest. And the speculators will play about 6 of these months in a big way, and the other 6 will be much less. So, in June, we certainly had the contracts to deliver, but before that we didn't. So we're doing a loss change for physical, which is going over the London market and hunting for the physical there. So that had been happening for the last couple of months. People had been trying to trade their position in the US into London, maybe to get more liquid access to gold. And then the first time you see a decent delivery month come up where there are enough contracts to deliver, huge deliveries, huge pent-up demand on deliveries. And of course, if we look at the biggest delivered gold market in the world, the Shanghai Exchange, you can see there's a premium to the US gold price of $38.30 right now for their gold contract. And so gold's trading the equivalent of 2012.20 out of Shanghai. It's lower in the US. Why? Because it's a heavily physically delivered market. I believe it's something like between 75 and 78% year to date, and I'll have to go look at those numbers, of gold traded on the Shanghai has been delivered, meaning it's physically, the warehouse receipt is moved to someone else, so they physically own it, have claim to it, and that's what drives the price up. When you have essentially a market that's more physically delivered driving the price up, or more physical demand in a heavy physically delivered market like China, it drives the price up. Now, in the COMEX, it hasn't driven the price as much, but given that physical demand, it is going to make the traders aware that there is a physical demand for that, and they're going to price that into their futures targets, the next time that they roll those futures positions. So when we do have big physical demand, it does matter. It doesn't drive the spot price in those markets because they're traded on a paper futures leveraged contract basis, which is mostly speculative. But when you see really big deliveries like we're seeing on the COMEX the first 2 days of June in gold, it means a big player is coming in. Now, this is going to be a sovereign, a central bank, a hedge fund type of organization, somebody with really, really deep pockets is coming in and taking those deliveries. And that means the big players are interested in gold. Why? Well, we've had the yield curve inversion. We've had really softening economic data. People know that we have a recession coming and they're preparing. And that's no surprise whatsoever. And I think, none of us should be completely surprised with that. I'm going to continue to talk as well about people pulling money out of the banking system. We'll get there in a moment. And we'll also talk about a case in which people are not being given the freedom to use cash and what that looks like. Cashless society is now being forced into society, and society's not too happy about it. Before we get to those topics, however, I was really inspired by this one speech given by Whitney at a Bitcoin conference. I know a lot of my audience are not Bitcoin people, but there are things that Bitcoin and crypto people and asset-backed digital currency people have in common with gold people is we really want sound and honest money. That's the whole reason that environment exists. And while I'm not the biggest Bitcoin guy, I do see it as a competing currency, not with gold and silver, which ultimately money and sit at the bottom of the pyramid, the strongest one. We could have different currencies, and I want competing currencies. So I'm willing to listen to the crypto people from the extent that they are also on the same page with regards to why we're in gold and silver. So I'm going to play a section of Whitney's speech from the Bitcoin conference this past week or so at Miami. And I want you guys to pay attention to what she says, because it doesn't really matter where you come from as long as you're speaking the same language. And I think we're speaking the same language here. And it was such an elegant speech. Here we go.
The other thing they need to happen is for the average person to become incredibly fearful of financial privacy and online privacy to the point that they will willingly trade their privacy for greater security, or rather what will be sold as greater security. Bitcoin, privacy-minded crypto, and privacy-preserving technologies like encryption must become public enemy number one in order for the offered solution, a completely surveilled internet and completely surveilled financial system, to be accepted by the masses. Ultimately, what I'm trying to convey with this information is that the fight over the control of the cryptocurrency space is part of the larger war being fought over the future of our society, our country, and the world. Will we sleepwalk into a world of CBDCs where intelligence agencies, central banks, and commercial banks have fused into the same Orwellian entity, where holding terror-linked Bitcoin or using encryption or mixers makes you a cyber criminal? Or will we fight the groups and institutions that have looted American wealth for well over a century and demand a return to the Constitution and the right to privacy, not just financially, but in all senses? Those that wish to force us into the former scenario clearly and unequivocally see Bitcoin as well as privacy-enhancing technology as a direct threat to their power and their plans, and there has never been a more important time to choose a side. Thank you.
Now, that was quite the inspirational speech by Whitney. She's given it at Bitcoin conference, but listen to what she said. The central bank digital currencies, digital slavery, digital surveillance, completely surveilled system. What have we been saying in the gold and silver markets for so long? None of us wants a central bank digital currencies. And I think it's an opportunity for us to get together and at least fight the same battle together, even if we don't believe in the same way. And I think that Whitney put this very elegantly, and I appreciate her doing that. Even though we're coming from different directions, we have same viewpoints and we recognize the same potential risk. And that risk is that the governments get a completely centralized system with a control grid built up, and the currency, which is push button control using FedNow and FedACH and FedWire and all those technologies based on blockchain, I believe, even though they're not admitting it. And you essentially have a completely controlled financial system. And she's talking about that. She's talking about as a technology person. She realizes as a Bitcoin person, as a technology person, she doesn't want the technology to be used in that way. And what do we always say about technology on this program? It's a tool. It can be used for good or for bad. And there are a lot of people that are into the private cryptos that see the same risks that we do. In any case, that's just a point of common ground for us. We're going to stick with gold and silver. We'll use private cryptos where needed to facilitate currency transactions. We welcome them into private currencies because they're private and they compete, and we don't have to use them. We're just against any state-based solution which shoves a centralized control system basically down our throat. And I think most people can pretty much agree with that as well. I don't think that's too far off. I wanted to get back to other developments in the marketplace. Of course, gold is just being taken off the big COMEX industrial market. It's been taken off of Shanghai. People are, whatever they can't get off of COMEX, they're going to London through the EFP. We've documented that. The big centers where you can get gold delivery, people are hunting for gold delivery. They want delivery. Delivery matters. They're not just trading paper, they want delivery. At the same time, people are getting into gold because of issues in the banking system. They're also talking about money taken out of the banking system. So let's talk about that real quick. There is a story that came out, and this is something that I have talked about dating back quite some time. I think when the banks first had problems, SVB, Silvergate, all of those, about $550 billion left the banking system within a couple of weeks after that. That was an astounding report that I got from a couple of different sources. I didn't see it from an official source, but according to the Daily HODL, which is more of a cryptocurrency magazine, they're saying the Fed has said that 30 additional billion exits the U.S. banking system in 1 week. So at the end of May, new numbers from the Federal Reserve show the amount of money people are pulling out of their bank accounts is once again on the rise. According to stats compiled by the Federal Reserve Economic Data System, FRED, depositors yanked $30 billion out of American bank accounts from May 10th through May 17th. That represents an increase of more $4 billion over the previous week. The U.S. banking system now has a total of $17.15 trillion in deposits compared to $18.03 trillion 1 year ago. So that would be about 82% of a trillion, or 820 billion, has moved out of the market in a year. 820 billion. Now, there's only a few billion, if you can consider Eurodollar accounts, maybe 45 trillion, of physical currency. So the rest of this trillion is electronic currency. So there's a lot more currency presented than when you see the physical currency charts. Just the fact that there's 18 trillion of currency floating around in the US banking system, and that's not even counting the trillions outside the US banking system, tells you how much real US dollar cash there is. What's going to happen when all that needs to be revalued? Well, look at what people are doing. They're taking delivery of gold right here. They know that those trillions of currency have been printed, either electronic or paper, or going to be revalued to gold. So they're getting their gold out of the system. That's why you saw the 15,561 contracts already on June being delivered. A massive amount, which you can see here on the thing, is more than the current open interest. So over half of that open interest, boom, gone in a day, most of it delivered in physical. That's abnormal, but it shows that people want it. Why do they want it? Because they know the banking system's in trouble, and they know that there's been almost $1 trillion removed in the last year because of the issues in the banking system. That talks about a foundational problem with the banking system itself. It is in trouble. And you know it's in trouble because look at what they're doing in Austria. 530,000 Austrians betrayed after a referendum on cash payments to the Constitution. So the people there have the right to do a referendum. Now, it doesn't mean that it has to immediately be turned into law, but it is a strong vote of where the people want to go to their Congress and to the government, which is being ignored. Listen to this. Authored by John Cody via Remix News. Quote, after 530,000 Austrians signed a referendum petition calling for the right to cash payments to be enshrined in Austria's constitution in 2022, Austria's political class is refusing to move forward with adding this legal right, warns the Freedom Party of Austria, or the FPO. Quote, nowhere else in the world is an everyday life without cash so clearly rejected as in Austria. We see this justified desire of the population, which is reflected in the popular petition for unrestricted cash payment, as a concrete work order to the parliament, said finance and budget spokesman of the Austrian Freedom Party, 𝘎𝑃 during a parliamentary debate. Although the referendum is not binding in a country of 8.9 million, the fact that over 500,000 signed the referendum petition shows a broad level of resistance against the push for digital currencies promoted by central banks across the world. That's over 5% of the population voted on this referendum. What are the chances, you think 5% of Americans would vote on anything in a referendum? I don't know. That's pretty rare to have that big of a group of people voting on a specific topic. However, the center-right Austrian People Party, which has long been said to have backed the right to cash, is now joining the left-wing parties of Austria and blocking all attempts to add this right to the country's constitution. So two of the more mainstream parties in Austria are blocking the right of Austrians to use cash, and it's the freedom parties or the independent parties which are trying to get in place, but they don't have enough momentum now to force that in the government. They're doing a referendum to say, this is what we want. They just can't force it, and the people of the world are saying we want cash. And that's a part of Austrian culture in which the Congress is not allowing them to. Why? Because cash is going away. And why? Because everybody's buying gold. Why? Because we have the new system coming into place. So cashless society controls, capital controls I've talked about for a couple of years now are now being put into place in different locations. The powers that be, the big guys are buying gold in bulk. The average person's not buying a lot of gold and silver, unfortunately, and they're getting rid of cash. And so we're herding people into a very limited financial system, and most people aren't paying attention. They're getting rid of cash. They're going to reduce the amount of independent banks in the system. Gold and silver are being treated as commodities and being bought by the big guys and not being accessible to the public necessarily. I mean, you can get them. Education is all around the dollar and the replacement CBDC, and you're not seeing that push towards gold. That's because the state doesn't want it. And I'm going to put up again a chart by Tavi Costa that just shows after yield curve inversions, which is the biggest, most consistent indicator of an oncoming recession. After you have to pay more for the 2-year treasury than the 10, signaling more near-term risk, signaling a recession. After that occurs, which it has occurred in the United States and has been occurring for several months, here's the return of gold, or the ratio of gold to S&P 500. S&P 500 is going to go down compared to gold. So if you're making your bets about what's going to do well in the next year to 18 months to 2 years, this is a 2-year chart. After the yield curve inversion, gold's going to beat the S&P. It always has. When the yield curve is inverted, I expect it to again. So if you're in stocks right now, you may want to think about rotating into gold given this chart, because gold's going to outreturn the S&P given the yield curve inversion and the oncoming recession. At least it has always in history when that has occurred in the past. It's a really nice little milestone indicator for you from when maybe to consider leveraging out of stocks and cash and going into things like gold and silver. Of course, I am not your financial advisor, so please do your own research and make your own conclusions there. And I'll put that disclaimer up on the screen for you. But I do think that this is a really solid indicator. And I think that we should pay attention to these indicators in terms of what we're planning to do with our portfolio. Of course, we can see the pressure on cash. We can see that stocks are going to come down. What are you going to go to? More than likely, you're going to go to gold and silver, much like the big guys are. Because remember, we see it in the delivery notices right there. The big guys are getting into gold and silver. Are you going to do the same thing when they're implementing cashless society and people are pulling their cash out? The system's about to become cash poor, and that means bank accounts, the regional banks, credit unions are going to come under pressure. How are you going to get access to your money when you need it? Something definitely to consider. I want to talk about Kinesis, which is a show sponsor. They do help the program, and we appreciate them because they take gold and silver and they offer a digital way in order to send that back and forth you can redeem it in physical gold and silver if you want, so you have access. Well, they do their audits to prove they have what they say they have. They've done yearly audits in the past. Now they've done a quarterly. So they passed their Q2 quarterly audit. I wanted to walk you through that real quick as a point of good news. So they have validated what's on the ledger, both in terms of KAU in the gold and KAG in the silver. And that does match up on the blockchain with what they had total counted by the auditors. And so you have a couple of pieces of paper that says, yep, this is a match from the blockchain. And it's a match for what was in the gold exchange. Now, this is the CEO of the company, Tom Coughlin, but we want the independent auditor's report. And according to Bureau Veritas, one of the leading gold audit companies in the world, they came out and said, yeah, for all intents and purposes, we see the gold as it's there. They did the counts and the bars. They have a nice sum here. And they perform these procedures. They compared the records to the custodian and the records provided by the administrators. Administrators being the different companies actually hold the gold, and the custodian being the parent company. And then they compared it and it matched, meaning what they said was being held for the customer accounts is being held. They also reconciled the total weight of the gold and silver bar and bullion to make sure it was actually gold and silver and it matched the weight. They visually checked each bar for the number, brand, and purity where applicable, where that was specified. A sample of over 4% total gold and silver items by weight were counted. That's 1/25th, which statistically is the right sample size to pull if you want that sample size to be more representative of the whole from a statistical or mathematical standpoint. Reconcile the physical movement of gold and silver bullion bars and coins, which occurred during the inspection period between the 17th of April and the 20th of April. And it says this audit was carried out to the best of our knowledge and reflects our findings at the time. And so it says, conclude that the information provided to it being the records from ABX's vault management system, that's the physical count, and physical holdings audited on April 19th to 20th show in excess of 4 billion items. So they put a little bit extra in there just to have some extra. It's not a bad thing. I was told by Kinesis' team they did this on purpose just in case there were any short. They put a little extra in there. It's not a bad thing. It's not registered to a customer, but if for any reason they needed it, it's there. They just put it there as a buffer. It's kind of like holding a couple extra bucks in cash in your bank account when you're writing a check. So you're writing it for $100. You want to keep 3 or 4 extra bucks in there. You can, or 10 extra bucks. You can't. Just keep your bank account from running low. But at the end of the day, they had a little bit more than what they needed. They passed their audit, and Kinesis has shown on both now on an annual basis and now on a quarterly basis, they're able to prove out the reserves that they have. So if you're worried about getting into an asset-backed digital currency, you're not sure if you're really ready for that. You don't trust the digital side, the blockchain, that's understandable, but just know that this company has done their audits and it's there and you can trade, and I use it all the time and it's wonderful. Don't have to get into asset-backed digital currencies if you don't want. We like them on the program because it allows us to circulate gold and silver as money. If we just put our gold and silver under the mattress, it doesn't circulate as money. It doesn't do anything. It's insurance for us for the long term, but it doesn't make gold and silver money anymore. And if we don't make gold and silver money anymore, we're going to get central bank digital currencies and fiat currencies. So because the government is not issued an edict that gold and silver is money doesn't mean we can't use this money. I think Kinesis is one of the ways, or others like Load and Ars and others, in which you can transact digitally, but have that based upon your gold and silver and have it audited. So in any case, that's interesting. But going back to a summary, massive gold deliveries on the COMEX the first 2 days of June, because June had enough contracts to deliver, and the companies that were asked to deliver are delivering at least a lot of it, over 3 billion in 2 days. That's pent-up demand for physical, which we knew was coming. Why? Because we watched the EFP numbers, which is people taking their futures positions in the U.S. and trying to go over to London to get that metal. And we also saw in the Shanghai, we've had really high deliveries now in the Shanghai for a couple of years that we've been following, a year and a half that we've been following that. We're seeing cash come out of the system. We're also seeing cash being destroyed. We're also seeing how much true electronic cash there was and why the system is going to eventually go into hyperinflation. And we also saw how cash is being restricted in Austria, despite the will of over 5% of the people doing a referendum directly to their government saying, we want the right to cash in the Constitution. And both of the main parties in Austria basically rejecting the will of the people. They're not listening to the people. I believe this control on cash and this control on capital is going to spread from Austria and other places like China, Russia, India, to other places in the world, coming to a currency in a theater near you. Be careful if you leave your cash in the banking system. The banking system is not completely solvent. It's in trouble. They're putting cash and capital controls anyway. It may make sense for you to rotate out to another sector. Again, I am not your financial advisor. I can't tell you what to do. That being said, I do gold and silver. That's the way I do it. I have some saved in a very secure local vault to me. It's not on my person. Nobody can rob it from me, but I can get access to it within a couple hours if I need. And then I use things like Kinesis and Load so that I can use digital gold and silver when I need to and circulate it as money. So I have both. I have the stored gold and silver, and I have some that I circulate to use as money, because that's what we need to do. Because as the currency crashes down, and to avoid central bank digital currency, we need to develop our own private market solutions and circulate gold and silver. You certainly can also buy like Valorum gold infused certificates, or basically currency, if you will, that has gold infused in it. And you can also do things like passing gold and silver locally. It's just the digitized version of that with asset-backed digital currencies lets you do it over time and space. Anyway, this has been a really good presentation, guys. Hope you guys appreciated that. I thought you would like to see the explosion in gold, because even though in the summer, gold and silver prices tend to fade a little bit, a lot of the financial markets tend to cool off. Gold is right in there. I actually think we're going to have a frothy summer in gold and silver, much more than people are expecting. Now, that doesn't mean we're going to hit 3,000 gold and $40 silver because we're in the summertime, but there is enough interest. And I think we're leading up to that recession, that the fact that the summer is typically a weaker time in the gold and silver market is not going to matter as much this year because of what's going on in the economy. People are going to continue, at least in a physical sense, buy that gold and silver. We'll see how those derivative markets respond. But I think they're going to have to start paying attention, because silver stocks are getting a little low. We're getting big deliveries in gold all over the world. That futures market's going to start to pay attention. And when you see the people closest to the physical, the bullion banks, producers, and merchants go really long, all of a sudden dump their shorts and go long and pass that short risk, that short price risk, over to the managed money types who aren't as savvy, that they believe gold and silver are going to do well. I believe gold and silver are going to do well, both from physical deliveries and the repositioning, the short-term repositioning on COMEX. Now, we'll have to see, of course, the COT report next week to see if they just reverse course and they were just basically trading paper for another month. But it looks to me, based on the physical demand and the repositioning COMEX, that we're going to have a nice market for gold and silver in the summer, maybe much nicer than we typically have in the summer months. So stay tuned to that. Remember, stay on the channel. We got tons of content on here for you guys. Don't leave. Tons of stuff coming across. This is your Thursday research presentation. I took it basic and simple and just went right back to gold and talked about gold versus cash and ways that we can facilitate that. We'll have deeper research pieces that I'm doing. Again, in the future about the new system. Stay tuned for that. I'm doing a lot of research on that. Tomorrow, we got the weekly market wrap where I go over the gold and silver market fundamentals in detail, the stories of the week, and the economic data. And I give you a preview for what happens next week. Stay tuned to the channel for all of that. And thank you so much for joining. It's been Rob Kientz with GoldSilverPros.com.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.